Hey YouTube, what's going on? Chris here. Want to bring you all a little tutorial today. I haven't got to do one in a while. We've been having a lot of good price action on a lot of coins, so just wanted to bring this to you. And what we're going to be going into today, guys, is basically Elliot Wave 101. So this is going to be the most simplest form that I can teach it to you. And we're just going to go through this pretty quick, guys. But Elliot Wave, number one, is a theory. Number two, it doesn't always work out. But there are times it can be very effective for you guys. And just to let you know, this 1, 2, 3, 4, 5 ABC can happen on a minute scale all the way up to a grand super cycle in terms of market cycles and different things like that. So you can pick this out on the 5-hour chart sometimes. You can pick it out on the 1-day chart sometimes. And what it does, it just gives you a projection of where the market may be going. So this is something that you would want to add into all your Western indicators, all your Japanese candlesticks, all those type of things. You wouldn't just want to use this on its own. Okay, so remember, guys, it is just a theory, but it can be very helpful as a tool. And what we're going to be studying out of here, it's Elliot Wave Explained, a real-world guide to predicting and profiting from market turns. So we're trying to really find these turns, guys, and these trends. That's what we're looking for. And guys, if you do like these tutorials, like, subscribe, hit that notification bell, and we'll keep doing them for you. So, guys, the most simplest form that I can do for you here. First, I'm going to read you the 5 most important rules that it says in this book about Elliot Wave. All right, so number 1, for every action, there is a reaction. Stock market movements in the direction of the main trend are called impulse moves or impulse waves. So like this, guys, this is wave 1. That's an impulse wave. Wave 3 is an impulse wave, and wave 5 would be an impulse wave, and then 2 and 4 are going to be your corrective waves. Stock market movements counter to the main trend are corrective moves. An impulse move is always followed by a corrective move. Remember, the market has to breathe, guys, as it goes up and down, just like a human breathing in and out. And that's what's happening here. We had a beautiful move up. Now we have to retrace. A lot of times that 0.382 or that 0.5 or 0.618, and then you have that next move that's going up. Generally, all impulse moves have 5 subordinate waves, while all corrective moves have 3. So what they're talking about, this wave 1 in itself, it has a 1, 2, 3, 4, and 5 inside this. And now on your fall here, guys, you're having your A, B, C correction. Make sense? Number 3. When the main trend is upward, waves 1, 3, and 5 are impulse waves, and 2 and 4 are corrective moves. When the main trend is downward, the first and the third waves become impulse moves, while the second wave becomes corrective moves. And guys, these are what we call reactions. So say you fall here, and you're in a downtrend or a bear market, you fall here. This is going to be a reaction. This is going to be your lower high that's formed, and then you drop back down again. And then fourth, guys, the action of the main trend can be taken place over a time frame of anything from a few hours to many years. When the main trend has completed a series of 5 waves, it reverses and a counter move of 3 waves is expected. And that's this counter wave right here, guys. See that? So that's what you're looking for. And remember, guys, something I'm going to add here. Wave 3 can never be the shortest. Okay, it's often the longest, but it can never be the shortest. So that's what you want to look for. Okay, that wave 3, a lot of times you'll get a big extension off that, and that can be a very powerful wave. Not saying that wave 5 can't be the longest, but that would mean that wave 1 then would have to be the shortest. Make sense? And guys, this book here, this is by Beckman, and basically, I wanted to read the back to you. It says, one of the most enduring forms of technical analysis, the Elliott wave theory, is unsurpassed in its ability to predict the direction of the financial markets. This book provides the clearest and easiest to understand analysis of Elliott wave theory ever published, unraveling its complexity. Robert Beckman, England's leading Elliott wave expert, addresses each aspect of the theory from its origins to its inner workings and how it is used today. Most importantly, he shows readers how they can apply the theory to forecast markets and make profitable trades. Filled with examples from financial markets, Elliott Wave Explained is a superb introduction to one of the best performing forecasting methods. And guys, it goes into all this: investing with the wave principle, charting and forecasting, crowd psychology. So that's what I was really studying during the bear market. Corrective wave formation, Elliott wave, and inflation, the trend channel, applying the Fibonacci series, the cyclical nature of the market, the origins of Elliott wave. So this has been great. And I also wanted to point out, guys, on wave 1, you're going to be looking for increased volume. Wave 3, you're looking for big volume. And wave 5, you're looking for big volume. And in these waves 2 and 4, volume is going to most likely be drying up before you make that next move. So guys, this is what I wanted to bring to you. We'll continue to do little series like this, but I just wanted to put this out there as Elliott Wave 101, the very basics of it. And I want you guys to continue studying it, and maybe we can do a series, you know, once every 2 weeks or somewhere where we'll do the next part of this Elliott Wave teaching. So guys, I want to bring you along with me. I'm going to continue to study the best I can. I hope you enjoy these. If you do, like, subscribe, hit that notification bell. God bless you all.